Welcome back to the Asia InsurTech Podcast. We are joined today by Dhirendra Mahyavanshi, a co-founder at Turtlemint. Dhirendra, thank you so much for coming back to the show. You may or may not remember, but it was in August of 2021 when we first recorded with you. And to be fair, we were all coming out of COVID, and we talked a lot about the evolution of InsurTech in India, building a digital-first company culture during a pandemic, which was hard, and a bunch of other stuff. How are you doing, by the way?
I'm doing great. And even the context of our last meeting, right? There were so many challenges we were facing at that time. And now I'm just reminded of what kind of journey we've had for the last 1,000+ days. It's been, today I'm sort of glad where I am in terms of in terms of where the company is positioned. So very happy to be back on this call, Michael.
So why don't we talk about that? I mean, one of the things we talked about back then, right, is we were coming out of COVID, and that COVID had actually served as a catalyst for this, was just the role of distribution and the unique way that kind of Turtlemint was looking at this, right? Do you want to talk about how that's evolved in the past 3 years and how maybe that's changed the way you look at stuff over time?
Yeah, so COVID, I think, brought about this awareness about insurance and the need and the importance of buying right kind of cover. And that was a big shift that we saw during COVID. And we were building a model for the tier 3 and the tier 4 markets, the markets which are underserved. And the unique way that we were building this model is we were doing demand generation through the producer or the agent mode. And then that demand, we will bring it to the supply through a platform, and then the suppliers get access to that demand. And that's the platform building activity that we were doing. So it has continued to scale. And in fact, it's moved to almost 80% of our business is become tier 3, tier 4 markets. Now there are more than 500,000 such producers whom we call digital partners who are using the platform to do various activities. It could be learning, training, create quote, and issue insurance. So it's actually accelerated after that. And the markets that we wanted to serve, which was the underserved market, has started growing very fast. In fact, we are seeing very aggressive growth in those markets.
Can we talk about this idea? Because you did mention the last time we talked as well about content itself as just a tool for engagement. Is it still something that you guys are working on, and is that still helping accelerate this connection with the end customers, right? And then getting them involved in the insurance market?
Yeah, the content is our primary lead generation engine. I mean, you can call it the oil of our entire lead generation machine. So,
I love it.
We create. We have accelerated how much content we create. Obviously, now with the new tools and with also AI coming in, we are able to do that at much higher scale. But it's done in multiple languages. It's very specific to the local geo for which we are developing it. So the content is very specific. And in fact, now we are able to also enable the digital partner to change some of the points in the content. And it gets distributed to sort of millions of consumers through their WhatsApp and through the Facebook and the other social media platforms that they may be using. And whenever an interested party, so it's not necessarily only lead generation, but it's also creating more awareness, letting the person know that, hey, in case you need insurance, there is this channel that you can use to buy insurance for yourself. Or if you just want to know more about insurance, about risk, about what is happening in the overall industry, or anything related to even financial empowerment, we are able to distribute through this content engine that we have created. We got it Grow. It's like I mentioned, the key source of lead gen. And I'll give you an example. So this year,
please,
in July, we launched a new product by a major insurance company. It was ICICI Lombard that launched a product called Elevate. It was a fantastic product. The product did very well across all channels. But the unique thing about the platform was that, which is what also the insurance company came and told us, was that it was a friction-free scale-up that they saw on our platform. It was content-led, and the entire engine worked together. The pre-policy, the platform integrated with them within 7 days, the fastest integration ever. The content that got created happened in 2 or 3 days. 1 day before the launch, there was this campaign that we carried out, all socially done, all media-based. And immediately from next day onwards, we started seeing lead gen. And by the end of the month, we had done more than any other partner with ICA, with that company. And we continued to be at that level for a few months, and then it dropped by about 10 or 15%. So we saw that power of content, ability to engage with the consumer, and to be able to do it friction free at high scale. In an offline world, or in any other world, right, we would have had to really, do massive offline meetings and campaigns and bring in
Yeah.
those producers, and it would have taken maybe several months till the product would have reached the last mile. And in my earlier avatar, when I was in an insurance company, I have seen it take a few quarters, sometimes 9 months to land the product in the market, and then that's when you plan actually your sales for next year sometimes, because you wouldn't get too much sale the same year. But this year we saw it happen like instantly. Within 7 days, we were out and about and we were distributing the product.
Can I ask a little bit more about this content creation? Obviously, this is really interesting to me, particularly in the context of artificial intelligence, right? If we were talking about this 3 years ago, definitely would not have been talking about AI usage to create content. We would have been talking, and you'll see where this is going in a second, about like financial literacy. But there's also now a tech literacy thing here and a content creation literacy thing as well. If you're creating content for these 500,000 digital partners, a lot of people, a lot of different cultures inside of India, right? A lot of different languages, a lot of different sort of micro communities taking place. How do you make sure that they know how to change the content? Do you know what I mean? And that you're comfortable that that content that's going out is okay. I'll put you this way. I create a ton of content. Oh boy, I could never do what my editing team does. Do you know what I mean? And they want me to stay as far away as possible from doing it because they want to make sure that what goes out is good. So how do you teach people like how to do all this stuff? Because it's new and it's moving pretty quickly. You know what I mean?
Yeah. So it's range bound. That's why we are able to do it. The changes that are like, for example, they can change the language of the content. So if they are sending it to their Hindi friends, then they can change it to Hindi language. If it's Telugu, then they can change it to the Telugu. So it's quite intuitive because they can easily see it on the content platform. They can change some part of the greeting. So it's basically edit text, and they can maybe change the contact details. So it's limited. The design and the format look cannot be changed, which is something that we should be best avoided, because creatively the best of the teams would have worked on it, created a high quality content, but within a certain framework, we make it editable for them.
So one of the things we used to talk about, right, was that every company was going to become a technology company. This was something that Mark Andreessen said, who knows, like 15 years ago, I feel like. And now it almost feels like every company is going to become a media company or a content company. You know what I mean? Like when you first started Turtlemint, I don't think the idea necessarily was we're going to become a media company. It's like we're going to be an InsurTech. But do you feel like there's a morphing at some level? Sure, the insurance part's super important, and I get that. That's not my point. But do you feel like you're more and more becoming like media and insurance at the same time?
We are using media. We are using the advantage that it brings in terms of being very interactive. And we're using that to maybe do more of what we could have done earlier. But I wouldn't say that it's like we are okay. There's one unique thing that we have done is that we have created channels on our content platform for insurance companies to communicate their products and address queries, if any. And those channels are sort of dedicated to those insurance companies. That is one proper. In fact, we even thought of monetizing it at some point in time, but right now it operates as a engagement channel for our partners. It's the shift that we are seeing. But I wouldn't, like last year, if you would have asked me the same question, Michael, I would have said that we are becoming an InsurTech media company. But having gone through that 1 year of experience, when we set out trying to do this, we know, okay, there is usage up to a particular extent of maybe the first level of information awareness creation and some level of content and engagement. Beyond that, it gets into the actual things of proposal creation, API integration, engagement with the consumer and the partners.
Yeah. One of the other things that we spent some time talking about in the last time we recorded was embedded insurance. And the idea was that embedded insurance is going to be the future. Well, we're in the future now, right? Can you talk about how that has evolved in the past 3.5 years?
So we, around that time when we had spoken about embedded insurance, we were attempting to partner with a postal service of India, the Department of Post, where there were postmen who were distributing. So India has about 180,000 postmen who cover 16 to 17,000 pin codes. And they are even today, even I was not aware that, there are so many letters that are getting delivered. So they have typically been carriers of good news for usually the rural markets. Like they would bring news from their children or carry money order that will enable them to sort of let them know that the salary has been received and they have sent a money order. So that has been the traditional image of the postman, that when he comes in, he walks in, he knows everybody. And then he says, how are you? And then this is your letter, kind of. So we created an embedded journey for some kind of products for that postman, because the postman uses a tool, an app given to him by the Department of Post. Within that, we added insurance, and it was embedded such that all of these people had a postal account. So India Post also has an associated bank with them called India Post Payment Bank, and they had a postal account. And through this, without exchange of any transaction or money, the postman was able to distribute insurance embedded within his sort of delivery services. So we saw 20 to 25,000 policies at peak about a few months back being issued on a daily basis through this journey.
That's a lot.
A massive scale. So this is one example. This is not classic embedded. This is through distribution embedded. The other journey was that we embedded insurance for certain products with e-commerce companies. So we have some large e-commerce companies in India, and Turtlemint is a tech provider to those e-commerce companies. And the typical small ticket size attachment kind of insurance policies are getting distributed on in those journeys. If they are sort of buying a device, then they can attach insurance for that device. Or there are people who book vehicles like two-wheelers on e-commerce platforms. The two-wheeler then comes attached with an insurance. We are also seeing platforms like, so this is one of the largest e-commerce companies, but we also see in one of the largest fintech that they have created this pool of the top 1% people in the country who are using that platform to settle their credit cards, and they get rewards around it. And they've created a massive customer base using that. So now they've also added insurance. So that insurance is embedded within the journey of any services that they may be taking, and that is empowered by us. So we are seeing different kinds of use cases, and it's evolving as we speak, depending on the platform and the kind of service they are delivering. We have also a watch company that does insurance attached with when a person books an online watch, typically an expensive watch. The classic, not the smartphone, smart watches, but the classic watches. So we do about, this year we will be doing about $150 million of embedded insurance transactions on the platform. We call it Turtlemint. It has a different brand name for the embedded journey. It will be about 150 million.
So this is the other thing that I wanted to follow up on as well. We talk a lot about how, and this was more like a 3 to 5 year ago conversation, right? Where small fintech, and I'm going to use that as a catch-all for any kind of finance that gets done using technology online products, would then lead to more financial inclusion, right? Because once I get somebody buying a small product, then selling them the next product or a slightly bigger product is better. Are you seeing that as well in the progression of Turtlemint's growth, saying the products that we were using 3 years ago have now led to, particularly in these tier 2, tier 3, and tier 4 cities, more financial inclusion in the way that you had expected?
Yeah, I'm very true. This is a great insight, and this is what we are observing, because that becomes the entry product. And a person who is buying insurance for the first time, we have many consumers who have never purchased insurance. So the entry product is a small ticket size product. We have something called e-Shramik. So e-Shramik insurance. Shramik means a laborer. E means, it's done online. So e-Shramik is able to get a small ticket size product through the local support that we have in those markets. And that is a 100 rupee or a 200 rupee product. And then later we start seeing, there are inquiries for a higher ticket size product for even for regular health insurance. We also see people who are taking low sum insured products earlier. So they would start with, say, a 300,000 rupee health insurance product, but then graduate to a million plus kind of a ticket size. And in fact, last 3 years, our sum insured for health insurance has been going up by almost 30 to 35% every year, the average sum insured that we had. So there is this understanding that the right kind of cover is important, and we see them graduate or progress towards a higher and a better cover.
Yeah, so it's working. I mean, that's one of the really interesting reasons why I want to ask you about that, because again, we had this conversation so much 3 to 5 years ago, but now we're 5 years past that. So it'd be interesting to find out if it actually worked in these, I think what are called sachet products, right? Really small products that lead into bigger products are actually working. Can you talk to me a little bit more about artificial intelligence and kind of its overall impact, not just on Turtlemint per se, although I'm happy to find out like where other pockets inside of Turtlemint is being used, but also just the overall industry and how the industry itself in India is reacting to the kind of prevalence of artificial intelligence itself and generative AI as well, and how it affects different parts of the value chain.
So while we are on the Turtlemint is on the distribution side and focus more on distribution, which I'll come to. But from an industry point of view, we also provide tech to insurance companies and other large distributors. There is a lot of investment that is happening on the product underwriting side, where you're looking at using AI and creating data models around it so that you're able to do much better, efficient sort of risk underwriting and create better models in your sort of business. We are also seeing usage in claims, because you have large document processing that is needed to be done for every claim that gets. And so I think an ecosystem is also getting integrated, because with the entire fintech layer having created integration points, I'm very excited about it, because I think that in the coming time, we could have like real-time settlement of claims basis all the work that is happening right now, and on detection or on damage, without having to go through the painful process of submitting so much of documentation with so much of manual work in terms of a surveyor and labor. It could go away. Right now, investments are being made. It's still some time to mature. So I haven't seen some pilots I've experienced, but not yet seen any insurance company fully having launched a working product. But in the coming time, we will see massive transformation and massive change there, on both on the claim side and also product underwriting. From a distribution point of view, which is where I think we are pioneering some change in customer engagement and policy management. And we will very soon be launching it. So for reasons of confidence, I can't maybe fully share that, but we have this is transformative. I mean, it's the entire way of engaging with the consumer for policy and the customer life cycle can be fully transformed.
But talk to me about this. So you want to use artificial intelligence to change the way that you're interacting with some of your clients from a distribution standpoint. I'm super curious to hear about this, and I'll tell you why. I had an entire conversation. I did an entire recording, I think it was last night or the night before, with a guy named Scott Knowles, who's the co-founder of a company called Deep Vector. They started by building this massive artificial intelligence engine to scan through claims and understand how the losses that are associated with those claims get built and what the underwriting is associated with it, right? All this kind of stuff on the claims side. And we had an incredible conversation about that. But on the distribution side, I'm super curious about where AI would fit in. And I would even be willing to wait to release this until this comes out, because I'm really curious. And I think the audience will be super curious to know about it too, about how that's going to work on the distribution side. And I think it's an interesting conversation to have.
Yeah. I think the entire intelligence around, so we have something called a RM, right? So the RM engages with the digital partner, and digital partner engages with the consumer, and there is this three-way communication that is a constant with and then the policy.
What's the RM?
RM is a relationship manager.
Got it. Okay.
So the what we have piloted is the engagement. While there is a RM, but the engagement and the policy management side can be fully automated. So with in his voice, in his language, including text, and the to and fro communication that is happening with the consumer and also with the digital partner. And that probably will be the first product that we will launch. It will take a few months, but it could maybe save at least 8 to 9% of distribution cost. I mean, which we can pass it back to the consumer, and it can have a massive impact on the insurance company side. So that's the area that we are investing in heavily, right? In the next, our plan is to move at least 50% of our staff into AI coming April, and from April onwards, I mean, we will completely focus on that.
Yeah, I mean, you're almost going to have to. Look, when I was a sales trader, right, sitting on the sales trading desk at Goldman Sachs, we implemented, and even at UBS, we implemented a ton of technology that gave the equivalent of an RM or even these digital partners, but sitting in the same space, right? The guy or the gal that was watching what was going on in the market, which in this case can be watching what was going on in the policy and the policy admin side, and then talking to the client on the other side and giving them information. We did use some machine learning and some artificial intelligence to build algorithms to help us on the trading side, but the technology wasn't advanced enough yet to do it in a way that you can do it today, where there was no you couldn't do voices, you couldn't do automated text stuff, you couldn't do all these really incredible interactions, which now you can build in. I mean, I can imagine a scenario where somebody in a tier 2 or tier 3 city who doesn't even speak the same language as, let's say, somebody in Mumbai, right? But is having a conversation with that relationship manager that's getting automatically translated into that language on a back and forth basis in real time, and also scanning the policy. Some of these policies can be very simple, but others of them can be really complicated. And to be able to use the AI to then go and scan the policy to see what the coverage actually is and have that communication back and forth between, again, a tier 3 or tier 4 city person, and then somebody in another place who's maybe their customer service guy or gal, you're talking about a leap change in the way that customer service can be given. And as a distribution company, that's not even including the potential sales that are possible because of this, right? So the power that's going to come out of this AI stuff should be insanely great, no?
Yeah. Actually, parts of it, what you mentioned, we have already piloted some of that.
I'm sure.
The early results are sort of amazing, including the data ability to scan the doc and come back with questions. And in fact, to be able to also do quick renewals, one-click renewals, basis the historical doc that is there, right? And then have a chat which necessarily sort of eliminates any manual intervention and completely driven through AI. So, seeing some success, not yet there is what I would say. I mean, some more work to be done there.
For sure. Look, I mean, we're at I don't want to say at the beginnings of this, right? Because some of this tech has been around for a few years now, but we're at the beginning of the implementation of it. And I don't even think we know what the impact is going to be yet. But the idea that you are testing this stuff and putting it out there is only going to make it better faster, right? Yeah. Because you don't know what the reaction from the clients are going to be. You don't know what the reaction from the insurers are going to be. And the more you put this stuff out there in a test basis, the faster you're going to get the reactions. I don't know. To me, the whole thing's just super exciting. Yeah.
Yeah. Correct. Yeah. So it's better to sort of put it out there, because that's when you get fastest learning instead of waiting for building to create a perfect model. In fact, that is the way to maybe build a better perfect model.
Yeah, I think so. Is there anything else going on using, particularly from a distribution standpoint, using AI on just a pure personalization? Do you know what I mean? The more information you get, obviously doing all the right data protection, stuff like that, but digging a little bit deeper into how to personalize that distribution experience for a customer. Is there a way that artificial intelligence can help there as well?
That's the most impactful thing from a consumer point of view, because you have so much of data across various sources that you can potentially use to give an ultra customized advisory specific to his requirement. And as we are sort of expanding, we are also looking at the entire financial life cycle of that consumer. We potentially will be able to use it for also his credit requirement, which is something that we're offering now. Also his wealth management or selection of right mutual fund kind of products. So we are we've added those layers, because then you can use like a full service, full stack for the consumer. And that potentially will be an impact. There is a new regulation though, and we have to understand the impact of that. There is a draft that has come out here called DPDP Act, which within the different layers of your company, there are restrictions on how you can use the data. So we figure out a solution, or we cognizant of it, and then use maybe AI to be able to develop something specific for the individual consumer.
Do you want to talk a little bit more about Turtlefin? You kind of mentioned it in passing, but it sounds to me like you're branching out from just insurance into other financial products. Do I have that right? And again, we talked a little bit before about the sachet products leading into bigger products, but I'm pretty sure that a few years ago when we spoke, we said, if you can build a big distribution business that people now are using for products that they trust, right? This is the whole thing about the finance world. You're never going to deal with someone you don't trust. When money's involved, any kind of money for any reason at any size, you want to deal with people and companies that you trust. But once you get that trust, well, then you can build other products into it. And as a distribution company, now you have all of these people in tier 2, tier 3, tier 4 cities that didn't even have access before to other financial services. Now they trust you, right? And your digital partners. So now you have the opportunity to build other products for them. You're seeing that happening as well?
Yeah. No, very, very well said. India is a low trust economy. So it takes several transactions or maybe even a few years for you to get that kind of trust or the positioning in the mind of the consumer to be, then he starts looking at you, as a trusted partner. And once you build that trust, then you won half the game. After that, it's about maybe building on that relationship more with that consumer. So we initially were focused on insurance, and currently even now core product is insurance distribution. But if you want to give the right advice to the consumer, it's critical that you also have as a company offering that solves for his investment needs. And I'd rather, instead of advising him to do insurance for investment, I would say that insurance should be for risk mitigation, and for investment, you plan your mutual fund. And that was our advisory earlier. But now, because it's the same consumer and we have this relationship with them through our producers who are engaging with him on a regular basis, he can reach out to our producer and ask for other services. And that was a starting point of us thinking about adding mutual fund and now what we are doing with loans. So, and we've seen amazing success because we've added thousands of such MFI mutual fund distributors. And we are also seeing consumers. So we have onboarded around 50,000 consumers on our SIP platform, where they are investing every month on a regular basis. And now it's it will touch about $200 million of AUM. I mean, not a very large AUM, but just started very recently, built out on the existing business model with 50,000 plus consumers already enrolled. Almost everybody purchased mutual fund for the first time.
That's amazing. But see, so this is working. Sorry, you can hear the excitement in my voice. It's actually working. All these ideas that you had 3 years ago, 5 years ago, where you said, if we build these products, then we'll teach people about how finance works. We'll get their trust, and then we'll be able to serve them other products that will help them. I think in a way, once you invest in a mutual fund once, and you see your holdings, your net worth, even if it goes from $100 to $102, it's still $2 more. Do you know what I mean? And then you're like, wait a second, instead of buying that coffee, I'm going to put more money into my mutual fund, because if it goes to $105, now it's $5 more. And then if I put another $100 in, do you know what I mean? And once you do that, I don't want to say it's addicting, but the reaction to that is always going to be positive, I think. And that's awesome, because all these ideas you had about helping financial inclusion in tier 2, tier 3, and tier 4 cities is working. And I'm not going to let you get away with saying $200 million is not a lot of AUM. It doesn't go from 0 to 12 billion overnight. It's just not going to happen. There are interim steps along the way. That's a big step, $200 million. Yeah?
Yeah. Yeah.
Is there anything else you want to cover or mention about it? You've covered some really great stuff, and thanks for being so open about all of these things, particularly some of the stuff that's just in test. But I think what you're doing it's working. And I will say the same thing to you I said the last time. I'd love to have you back on the show whenever you want to come on to talk about some of the new stuff that you're doing.
Sure, Michael. I think we've covered, all our new initiatives. I'm very excited about maybe talking to you again 2 or 3 years later and telling you, where each of these initiatives have reached.
Thank you. Okay. Thanks again for doing this. I really appreciate it.
Thank you, Michael.